This is a Crypto Legends podcast.
Today, we're discussing the recent crypto winter. It's a time for deep inquiry, not about simply what works and what doesn't, but about how's an otherwise thriving business to get ahead of fear, uncertainty, and doubt, contagion, and regulatory scrutiny. Being winter-proof is about excelling, not just keeping your head above the water. It involves agility, ingenuity, and a calm temperament. We're honored to have two distinguished guests who will share valuable insights on this topic. Mary-Anne Moffatt, CFO at Ramp Network, and Raphael Fettaya, co-founder and CEO at Nilos. Together, we will dive into topics such as overcoming challenging market conditions, drawing lessons from previous crypto winters, and developing robust business models, including how to build resilience and adaptability, treasury management, how to balance short-term financial needs versus long-term growth, and company culture. Stay tuned if these are the kind of tips you're looking for. So, Raphael, Mary-Anne, thanks for joining us. So let's jump right in. So I've got a question for both of you on managing finances during a crypto winter, talking about cash flow management, financial stability, and how you are able to be proactive when things are good and to be able to be adequately reactive when things are bad. So let's start with how we react when things aren't as we want them. So how do you manage cash flow during a crypto winter to ensure the company's financial stability? Who would like to get first?
Yeah, I'll start if you want. So, look, I think you put in the best practices when it's not a crypto winter, and you get the benefits when it is a crypto winter. I would definitely start with that. I think understanding what you're spending it sounds really simple, but actually, who is spending what? How is it being spent? And why are you spending it? Understand your profitability or your unit economics. Is your product actually making money, or is it burning the money as well as the operational expenses burning the money? I think that's also critical. And if it is burning the money, what do you need to do to turn it to profitability and have a clear path towards that? And then I think the other thing I would say is just have a regular, and by regular I mean weekly, bi-weekly, every daily, cash flow forecast, cash flow view, so you know where you're standing and you're seeing what your burn is on a very, very regular basis. Knowledge is power in this instance, in the fact the more you know, the more you can do about it. The less you know, the less you can do about it.
So I'm totally agree with what Mary-Anne is sharing. So we're a very early stage company, and we kind of lived only during the crypto winters. And I think that's what we learned mainly. We had to have very early a view on two main metrics. One is how much we burn every month, and to have very good predictability on the revenue and the growth, even if it's very hard for early stage startup. And that is an exercise that we work on it a lot. We update our budget, I think, every week to adapt the forecast of the revenue. And the idea is always to know as precisely as possible what's the runway. And I think that's the number that's the thing that you have to have in mind when you're an early stage startup, especially when you're not profitable. You need to know how many months you have until you'll die, and then it enables you to take any decision.
Makes sense. And so, Mary-Anne, just to drill down a little bit. So obviously as the CFO, you're the one that everyone looks at when, we're navigating a sort of, whether you want to call it a recessionary environment, or certainly when there's a downturn, both in the macro environment and also in the sort of venture capital space. Fundraising is becoming more challenging, but obviously at Ramp you were able to raise a Series B this winter. So congratulations on that. So could you speak a little bit more about how that journey was and what your approach was to that?
Sure, thank you. It was great news to raise at the end of last year. And I think it was an interesting journey. For complete view, I wasn't actually at Ramp for most of the raising. I joined last September, so a lot of the hard work had been done already. But I think it was certainly a challenging environment as things were changing from a bull market to a bear market almost overnight as we were raising. I think it's about making sure we are, anybody is clear in their development plan, where they want to spend the money, how they want to spend the money. Unit economics, coming back to that again, that is really critical. Investors want to know that your product does actually make money. And it may be a volume play, but it will actually make money in the future. I think as well, it's about making sure you've got realistic but challenging growth targets. I think not just for investors. I mean, to an extent, investors want, it's not like it was 2 or 3 years ago where investors would just take, you said you were going to grow 100 times and they would believe you. They're going to challenge you much more on that. And I think once even if you're not raising funds as such, I think making sure as you're managing your business, making sure you've got that realistic but challenging growth target. So you're not, you can actually deliver on them. That's really important. And as I said, that sort of clear development plan, what's in my product roadmap, what's going to come next, what's the next big thing, where do I want to put this money, where am I investing this money? Because if you don't have that clear plan, you'll just end up eating the money on things that you didn't necessarily mean to do, rather than saying, yes, I'm going to spend X here and Y here. That's really, really critical.
Yeah, makes a lot of sense. And I've definitely been in those environments before when you're forecasting for an investor, you take the absolute best possible scenario and sort of stretch that out as far as you can. So it's interesting to hear that context of taking perhaps a more reasonable, rational approach to forecasting than maybe a couple of years ago would have been a bit different. We talked a little bit about having that weekly, daily view even on the cash flow, on what you're spending your money on. And Rafe, maybe you want to jump in on this, but sort of how do you go about getting that information from your finance team? Do you have a sort of a suite of business analytics dashboards, or are you interfacing directly with your finance director or whoever's responsible? And how does that help you understand, what the business is doing?
In our case, we have our technical team, our engineers working directly with the finance guys, and basically try to connect to all the platforms that we have, whether it's blockchain related or if you had crypto bank accounts, and try to merge data into different tools. We have a very cool back office tool that is discovered called Retour, that enables to build app for back office without writing too much code. And the idea is that we need to every time to have all the transactions that happens through Nilos in real time, to know how much we sell cryptocurrency, how much we buy them, and to have very, very details on all the operations that happens, to have also real-time balances in all the accounts, which is not always straightforward. So all these challenges that you need to do, especially when you work with banks that are not major banks and that don't have necessarily very clear APIs, so you need to have your own implementations of them and 3 iterations on that. So I think that was a lot of work, and so that's why we have really the technical engineers working directly with the finance team for that.
Perfect. Is there anything else either of you would like to say on this sort of topic of managing finances, or shall we move on?
I think I would just reiterate, almost what Raf just said. We have a very similar setup. We've had our tech teams being able to, pull in all our balances where we can, and it's just knowing what your numbers are, knowing what's moving is a way just to make sure you make the right decisions.
Sounds good. So let's move on to how do you build resilience and adaptability in the business, and sort of a big part of that is treasury management. So Raphael, let's start with you, since Nilos offers businesses crypto and fiat treasury services. So from what you can see among your clients and best practices, how have they been behaving, and what are you seeing in terms of crypto purchases at the moment?
Yeah, so I would say 3 main points in order to edge hedge again the volatility risk and like the risk of the market. In general, one is like stablecoins. I think most of the people and customers and payments that we go through, we see that our platform are done in USDT and USDC. The second thing is we see people moving out of centralized exchange a lot, and they go to custodial or non-custodial solutions, but making sure always that the funds are on-chain and always visible and trackable, that traceable. I think that's like the most important. And the last very interesting, I think, thing that we noticed on the last days was that the number of bank accounts opened by the crypto companies is increasing a lot. So now, because of all what happened recently in the crypto banks in the US, so we see like basically any providers that is giving providing IBANs to crypto companies is selling basically to all the companies because they need to have like multiple options. In our case, we also offer virtual IBANs in Europe and GBP to our customers, and we see like a lot of people that already had a couple of bank accounts that are willing to open more just to be on the safe side.
That makes sense. Mary-Anne, is there anything you'd like to add?
I think just to reflect on what Raf said about having multiple bank accounts, it's mitigating the risk. Whereas 2 years ago, even a year ago, you might have been prepared just to have one bank account because there was no risk. Everything that's happened this year in the US, with Silvergate, Signature, etc. I think most people in crypto have been touched by that in some shape or form. And suddenly you realize that actually, we need to have better resilience, and we can't trust the banks to survive like we used to be able to, and therefore we need more of those bank accounts. We're in a similar boat to that, in the fact that we have numerous bank accounts in order to support and make sure we have the resilience.
Makes sense, and that sort of leads into the next thing I wanted to touch on, which is on the general nature of adaptability and balancing the short-term needs of the business versus long-term growth. And as we discussed with investors, in the current market, it's not just growth at all costs, it's profitable growth. So how do you balance that need? And we talked about having multiple bank accounts. In this sector, we know that there can be risks from banks either failing or pulling out of crypto services. So outside of the banking environment, what else do you think that you do in your businesses to stay adaptable and balance, your short-term needs and making sure that you hit those long-term targets?
I think for me, it's making sure you have clear investment decisions. So you're deciding what to invest when and where, and then balancing that off. We want to do this next big thing, but we also want to do some of the small things as well, which will help, as things, on the small front. I also think there's the importance of continuing to develop at pace. You don't want to. Things are changing so fast in the market at the moment. You want to make sure that when you make the decision, you want to develop something, you want to get an MVP out there as quickly as possible, and that I think is really critical to go. Yes, we're doing this, and we're seeing improvements. So we're doing some of the short term stuff, which eventually is going to pay off in the long term. And then having that way up of actually what do you do first, second, etc. And being able to make quick decisions. An opportunity has come up. Let's take it. Let's run with it, and let's deliver. Because that opportunity is not going to be here. And even today, we were having that discussion as a management team about an opportunity that's come up, and we need to put everything, well, not everything. Even today, we had an opportunity that we wanted to discuss, and we need to put a lot of things against it in order to deliver. And it's the right thing to do because it'll give us some short-term benefit.
Sounds good. Raphael, what are your thoughts?
Yeah, so in that case, I can share maybe what's adaptability means, I think, for much more early stage startups, especially in the current context. And I will say that adaptability means the ability to make pivots in your product direction, especially because the world is moving faster than it never been, and in general, so it resonates to the keep a runway that's always big enough to be able to adapt and do the right changes. We've done a lot, I think, since we started the company, whether it was a very big amplitude or smaller ones, but you always need to be able to change a bit the product directions in order to optimize the revenue. I think you need to make a lot of short-term profits and decisions. So it's very important also to have small goals sometimes, but I will bring revenue, show to the investors that you're on the right path, and also make yourself more comfortable with and increase a bit your runway thanks to the revenue, which is quite unusual, I think, at least on the last years for startup. And I think what's also can be important is try to, when you invest in a project, always think whether you can reuse this project in the case that you're shifting a bit. So if you decide tomorrow that your product directions will change, whether the part of the code that you build or the infrastructure that you build can be reusable, because otherwise if you're trying to what we call overfit in data science to one specific project or one specific approach, you might have to restart from scratch and not having enough time to do it.
I would also add in there as well, have the or be prepared to say no. We're not going to do this. We're going to do this one instead, but we're not going to do this one. And having the confidence to do that
makes a lot of sense, and I think that's probably a big part of because a lot of companies will want to do everything, every opportunity that comes up, and there needs to be that ability to measure, how much money is going to go into this, and what are you likely to get out of it. So I think that's a very good point, the ability to say no. So then moving on, so moving slightly away from financials and the numbers onto company culture and the values of your business. So, getting everyone aligned, getting capable people, passionate people, make startups a success. And in a recessionary environment, obviously things can be more challenging in the macro sense, in the investment space, really in everything. So for both of you, the question is, what are the core pressures that you see on your businesses, getting that alignment and the passion within the business, and how does the challenge of the market conditions affect that, and how do you navigate that?
I can start. I think everyone that is joining a startup eventually wants to see it grow very quickly. Wants to see himself, I think, quickly leading a team and growing in his career path. And I think that's something that won't happen these days. And I think the way you overcome this challenge is just to share and always share and be transparent with your team. In our case, we have weekly where everybody updates, we share the numbers on the revenues, we share the market conditions also. And I think every member of the team is aware about why it takes more time than it could have taken a few years ago to raise funds or to grow the company. And as long as you see customers growing and you see the revenues increasing, I think people still are happy and see and really believe in what they're building. In our case, we didn't have everybody decided to leave the company since we started, and I think it's a very big victory for us. So I think in general, it can be overcome for sure.
I think it's also quite tough on you. You have to make some trade-offs, and you might have to decide on doing one thing rather than another. And it's communicating and explaining what and why that is. I think that's particularly as you get slightly bigger, it's really important on that communication. On the other hand, I also think just keep delivering, even if it's the small stuff. Show that you're continuing to do stuff. You're not putting the brakes on everything. You are getting stuff done, and then just focus. Have a much more focused view. And these are the big one or two things we need to deliver, and that's what we're going to do with some small things around the outside. And it's really making it clear to the business as a whole that we're still moving forward. It's just a different way of moving forward than it might have been when you had huge amounts of money that you could spend, or you have the same amount of money but you want to make it last longer. Because you don't know how long the crypto winter is going to continue for.
And when you're having those sort of constant ongoing updates, obviously market conditions are changing and things in your business are changing. Do you have things like mission statements, vision statements, core principles of the company? Do you use those, and do you find that helps in aligning the team?
Yeah, I mean, we absolutely do have that. And And I think just, bringing ourselves back to the basics of why are we here? Why are we doing this? Where do we want to get to? Does help with just aligning people thinking. Yeah.
Anything else you'd like to add, Raphael?
Yeah, in our case, we're a pretty small company, so we don't I think everybody is really aware always about a mission, and we talk we every week we remind to all the team what we're building, trying to share. But I don't think we need those documents in a formal format yet.
Finally, we always end our episodes looking toward the future. Normally we're idealistic with the questions, but because this is a crypto winter episode, we want to work within that challenge. So can both of you speak to any innovations existing or that you see coming in the future in business, in tech, wherever you see it, that you think will make surviving future winters more bearable?
So look, from my point of view, first of all, the crystal ball. I would love the crystal ball. I'm not sure who's going to find that for me. But if I can't have that, then I think one of the hardest things I've found, having worked in fintechs over the last sort of 3, 4, 5 years, and even before that when I worked in a big bank, of actually, what are we spending our time on? What are we developing? How much time is it taking to develop this versus that? What makes sense in doing it? And nobody has come up with a good solution yet of how to do it. Even saying, you obviously don't want your developers sitting there filling in timesheets and stuff. So how can we track how long it takes for us to do something versus something else, and therefore, what's the real return on investment of doing it? That I think would be an amazing innovation that I haven't figured out yet.
Yeah, so myself, in general, I think that this crisis that we live, the startup crisis that we live right now, has been a shock for all the entrepreneurs. And I think we need innovative way of financing companies. And I am myself a big believer in revenue-based financing. And I think mixing revenue-based financing with blockchain and with the traceability and the transparency of the revenue of the company can create very good new options for financing companies. And I think that's going to be a very, very important, and that will be a great innovation. Whether a company could leverage the money that they make every month in order to extend their runway and avoid dilution.
It's interesting that you both answered the question sort of with a different lens. So Mary-Anne taking, I think, the view that most CFOs would take in terms of, we spend a lot of time building things and doing things, and actually getting a real view on what we're building, how much time we're exactly spending on that, and what comes out at the end, and how we can attribute profits in the future towards that activity. And then on the business side, the answer from Raphael being, part of our challenge is raising money in startups, and you don't want to over dilute your business. And actually, if you have businesses generating regular recurring revenues, the ability to lean further into revenue-based financing as a lever for growth, I think, is a really interesting insight. So I'd like to end there. Say thank you both, Raphael and Mary-Anne. You're both genuinely crypto legends. It was a pleasure to have you on the show. If you'd like to stay updated for more legendary tales, hit the subscribe button, leave a comment for what you'd like to see, and stay tuned as we bring you more inspiring stories from the crypto legends of Web3.